Hello everybody, this is Simone Guy with the SimpleFib method. The purpose of this video is to look at how we use the 50% breach fib, which is the primary fib that we use for finding entries in this method. Now this fib should only have 3 levels on it: the 100%, the 0%, and the 50%. You want to do that with this fib so that it does not confuse you with your intraday fib. Okay? The 50% breach fib is drawn from a low to the previous high in a downtrend. So for example, we could call this a downtrend. And I'm just going to pick a low. Alright? So let's say we're picking this low, and the previous high to that low would be here on our 15-minute chart. So this is the low, and this would be the previous high. So we would draw our 50% breach fib from the low to the previous high. In an uptrend, we are going to be doing the reverse. We are going to be fibbing from a high to the previous low. So for example, we began to trend up here, and I'm just going to be picking this high. That was a high. And the previous low to this high would be here. And so we would draw our 50% breach fib from this high to this low. The 50% breach fib is always drawn into past data. So in a downtrend, what we are doing is fibbing from the low that holds to previous highs. In an uptrend, we're fibbing from the high that holds down to previous lows. So let's look at how we would have fibbed this entire downtrend on this reversal. We have a low, and the previous high to that low is right here. So let me just highlight that. Low and previous high. So we would fib from low to previous high. And this would have been our 50% breach level. Okay? If the trend continues, then we have to find the high before that high. So we're going into past. And then we'd extend our 50% breach fib again into the past. If the uptrend continues, we continue to do the same thing. We'll need to move to the previous high and adjust our 50% breach fib accordingly. Previous high, and we adjust our 50% breach fib. Are we seeing that? Now, the thing that's important with drawing the 50% breach fib is being able to identify your highs and your lows. That's the key. And this is where fractals come in. The fractals will quickly point out and highlight for you the significant highs and lows that were created as the market trended or ranged. On this platform, which is the VT Trader platform, we can easily add fractals by right-clicking the chart, going Add Indicator, and selecting Chaos Fractals. And clicking OK. Okay, here we go. Here are fractals. And you'll notice how easily the fractals pick the highs for you. If we were to do an uptrend example, and picking the same high, picking this high and this low, we would fib from the high quite easily, and notice how quickly and easily the fractals pick that level. High, low, and we have our 50% breach right here. And we would be moving, if the market had continued to fall, we would be moving to the previous low. Now when the lows are this close, I use the lower low. Alright? And it's the same that applies for the highs. Alright? So our next low, our previous low, would be this low had the market continued to fall. So we would have extended our 50% breach fib to that level. Now the thing about fractals is that a fractal marks a significant price level in an up or down move. Fractals are formed in an up move on a candle that has a higher high than at least 2 candles before and 2 candles after. This means that when the fractal is created, there is going to be a delay. And this is why it is going to be important for you to begin to use your eyes to pick out highs and lows as the market moves. Let's look at this, for example. This was 1:30 a.m. on the 10th of March. This fractal would not have been created until the open of the 2 a.m. candle. For down fractals, or fractals formed in a down move, let's look at that. It is the same, right? A fractal is formed on a candle in a down move that has a lower low than the 2 candles before it and the lower low than the 2 candles after it.